If you want to get a good interest rate, repayment plan, and low closing costs, you have to do some legwork with your hands. This means that you need to compare offers by as many different companies as you can. You can do this now via the internet. Many borrowers automatically choose the company they've worked with previously, but they may not always get the best deal. Most HELOCs use the prime rate as a basis. It's now easy to compare companies. In fact, you might not even need to use a mortgage broker. Do not give in to the temptation of settling for the first few offers because a small detail can make a big difference in the long run. A tiny increase in the APR, for example, can mean thousands of additional dollars over the life of the whole HELOC. Once you've shortlisted your HELOC lenders, you'll want to compare their offers on the following. Margin. Some lenders add higher margins more than others based on your credit profile and home equity. This is the most significant factor in determining your HELOC rate. Rates on fixed rate advance options. This is the second most important factor for your HELOC rate, and this can be as varied as the number of lenders. Maximum lifetime rate. HELOCs will have a restriction to ensure that prime plus margin cannot go over a certain amount at any time. This is your protection should prime were to rise drastically over the life of the HELOC. Interest only against fully amortized payment. HELOC payment terms will vary. Some will allow you to pay just the interest due on the outstanding balance, while others will ask for principal plus interest payments. The lender that follows the latter can sometimes amortize the payment over 10 or 20 years. This will make the payment materially higher overall. Draw period. A draw period is the length of time that you can draw on your HELOC, and it can vary among lenders. A longer draw period is advantageous if you plan to keep the home and the HELOC for a longer term. These periods run for about 10 years and don't differ drastically from lender to lender, but it is still good to ask. Repayment period. This sets how long you have to pay back whatever funds you drew from the HELOC. Similar to draw periods, this is usually standard at 20 years, but again, you should double check. You have to get the longest possible time or at least enough time according to your planned time in the home. Annual fees. HELOCs work in the same way as credit cards in that you can use and pay off the funds anytime. However, for the lender, this will require more overhead than traditional mortgages, so they often charge an annual fee like credit cards. This fee may be insignificant, but do compare because you might choose one that happens to charge the highest among them all. Early termination fee. Many HELOC lenders charge this fee if the borrower closes the HELOC within a certain number of years. Not only will the actual fee matter to you, but find out how many years you need to hold the HELOC before they will waive this fee. That's it for now. On our website, you can find more posts and podcasts, as well as calculators and other financial tools. Do you have other ways to get the best and lowest HELOC rate? We would love to know your thoughts, so feel free to share them in the comments below. I hope you enjoyed it. Don't forget to subscribe to our podcast channel on YouTube, and we will see you next time.